before the year 2009 is up.
Well, I agree with them. I think on the dollar, it's going to have to break out over 88 again, and I don't think that's going to happen. And I think the reason for that is that a lot of the future and soon-to-be future cutbacks in interest rates by European entities has already been anticipated. And I think that's why you're seeing the pressure on the pound and the euro, et cetera. And I think that's going to be over when it becomes reality over the next month, maybe 2 months. And I think the dollar will range trade between 88 and 78, we'll say. It recently was down at 79. And so I don't see the dollar appreciating any further or much further against those currencies. You've got to split the Treasury market in half. We'll say two halves that are equal, but I'm only guessing. The Fed and the Treasury are going to keep 30-day, 3-month, 6-month, 9-month, 1 year, and perhaps 2 years down pretty low. And they'll do that until they can't do that anymore. And I think they won't be able to do that anymore in the last quarter of the year, which kind of jives with what you were talking about. And then the longer end, I think there's a good chance the 10-year, which is around 320 right now, I think the 10-year note could go back to 4% in the last quarter of the year. Might even start sooner. I know that the Fed said yesterday, Bernanke, that they were going to enter into that market, and they will, but I don't think they're going to be as successful as they have been in the short end. And so I think that the long end will start moving up, and once that happens, maybe in September, October, then I think the march to take profits in bonds will begin. And that would trigger what you talked about in the flight to quality, the only quality that's left, which is gold, silver, and perhaps commodities or energy-related issues. And so that's the way I see it, but I don't see any big rise in the dollar. I don't see any big drops in the other currencies, so to speak. I think gold will trade higher during the first 6 months of the year, at least challenging 1033, well, let's say $1,000 an ounce. And I think that by the end of the year, we got a good chance at 2,000. And I think Greg is right. The greatest plays will be in the blue chip gold stocks, Agnico, Goldcorp, Silver Standard, and so on. And I think they're going to make real good gains. In fact, Agnico, I think, can do $0.50 a share this year in earnings, and that's really good for them.
Bob and I have outlined what's going to more than likely send silver way back up to $20, $30 and higher when this bond bull market implodes later on in the year, and that money starts to search for the only safe havens left, and that's generally considered gold and silver and the energy sector as well.
Well, I think it's simple as far as silver is concerned. Silver is a reflection of inflation, and we've got two banks that are short 98% of the short position, which is absolutely criminal, and the CFTC allows it to go on. What they're doing is offsetting derivatives that they've done in another market, and that's I think why the CFTC hasn't done anything about it. But silver is an inflationary metal, and once the economy goes down and stays down, then silver will not be as good of investment as it would have been otherwise. In other words, once we start to see deflation. And so silver should continue to do well. When inflation ebbs off or dies, so to speak, then it will become problematic. I agree with you on SLV. They're using futures contracts. They're using derivatives. Nobody knows what they've got in total. So what the writer or caller is saying is correct. And I don't recommend it unless you want to jump in and jump out and trade it. That's okay. But otherwise, no. I think ultimately, and I've said this many times in the program, everything will be in either gold bullion or gold bullion coin, and that is going to be the safest place to be in the long run. And but in the interim, We don't know what the shares in gold are going to do. They heretofore have acted well for the last 8 years, and I think they will act very well over the next couple of years. My only question is, will they continue to perform as they did so well in the 1930s during the deflationary period, ultimately? And I think the answer is yes.
You know, two things I'd like to add. Firstly, Greg McCoach will be in the second hour, my featured guest. I hope folks will stay tuned to us. And Greg agrees with Bob's comments. Gold shares are going to outperform in the months and years going forward, more than likely due to the fact that they were crushed in 2008. So, you know, the higher quality shares, he's a big fan of. Back to your SLV point there, you know, concern about the exchange-traded fund for silver. The bank's name that manages SLV is, of course, Barclays. Well known in London, a huge banking institution. Unfortunately, most banks are under considerable scrutiny thanks to the mountains of bad debt and mortgage-backed securities, collateralized debt obligations, and related structured investment vehicles that are weighing heavily on these markets. Folks really have to ask themselves this question. If the underwriter of the silver ETF were to suddenly find itself insolvent, which can happen almost any time, just what would happen to the millions of folks or the millions of shares out there and all the people who own those shares of SLV? What happens if an ETF's bank goes bankrupt? Folks might find out in a silver squeeze, could find themselves very unhappy with the results unless they take physical possession. And I think Bob would almost certainly agree, as would Greg and Doug. And the real safe play here and the real bargain is in physical silver. If you can find it, go to your local dealers, check online, do your best to pick up silver at spot or below with junk coins, but don't pay extravagant prices over the spot price for silver. You can find ways to do it. And Bob, please tell listeners more about the International Forecaster and how they can get one of the world's leading financial, business, news, and economics publications.
Well, the forecast is about business, finance, economics, and social and political issues all over the world. We publish on Wednesday and Saturday by email, runs around 40 pages each time, and we have a hard copy that goes out twice a month for those who are not on the Internet. You can get a free copy by going to one of three places or any of the three places, and that is our site, theinternationalforecaster.com, theinternationalforecaster.com. Our email address is international_forecaster@yahoo.com, international_forecaster@yahoo.com, or toll free 800-375-4188. That's 800-375-4188.
Very good. And Bob, I just wanted to let you know that I got a call earlier today from Bernie Madoff. He asked me if you would harbor him for a while until this trouble passes.
Well, I tell you one thing, if I could get him out of New York City, they won't find him.
All right, my friend, we're going to look forward to talking to you again next week.
We'll see you there.